Welcome to the RealVision Defiant weekly show where we talk about the hottest stories in the digital asset space. I'm Ash Bennington in for Robin Schmidt, who's on assignment today. Very pleased to be here with Cami Russo, Chief S at the Defiant. Cami, welcome.
Hey, Ash, thanks so much. Great to be here again.
It's a pleasure to have you. Cami, lots happening. It's Fed Day, lots of other things in the news cycle. What's at the top of your screen today?
Yeah, well, I think everyone in the market is watching, seeing what the Fed will do. I think all the smart money is betting on a rate hike. Is it a quarter a point that kind of that's priced in at the moment? So we'll see whether that's the case, if it's even higher, or if they decide not to hike. I don't know, like what are your thoughts there, Ash? Like, do you think that the market is prepared for a more kind of constrictive monetary policy? Is it going to freak out after the rate hike, or is everything kind of already priced in?
Well, Cami, that is the $20 trillion question that people are wondering about. Look, I think it's pretty well priced in that we're going to get a rate hike. We have inflation here at 40-year highs. So there's general consensus about the fact that there is going to be some tightening, or perhaps more appropriately said, a withdrawal of this incredibly ultra accommodative monetary policy that we've had since the 2007-2008 period, except for a brief blip when rates attempted to be raised and then got pulled back down to the zero bound with COVID. Exactly as you said, Cami, this question about whether it's going to be 25 or 50, that really is what people are going to be looking for today. But irrespective of what today's number is, it seems highly likely that we're going to see a succession of rate hikes to attempt to get inflation under control. Obviously, that is the portion of the dual mandate that seems to be most saliently problematic in the U.S. economy right now. But let's talk a little bit about what the expectations are going into this for digital asset prices. In Bitcoin, we saw a dip below 40,000 a week ago today, last Wednesday, and it's essentially been range bound ever since, mostly between 37 and 41K on dollars on the price side. This is remarkably range bound for Bitcoin, relatively stable. It almost has this feel of markets just waiting to see what happens and what gets telegraphed next. After all, it has been a very long time since we've seen, rates at a normalized level based on like a Taylor rule calculation. That may be a little bit of jargon, but the point here is rates have been incredibly low for a very long period of time, essentially for the entire period where we've been talking about digital assets. So I think it's going to be very interesting to see what happens next, Cami.
It's clear that everyone is watching to see how crypto reacts to an environment where rates are not at zero, and where there is not kind of trillions of dollars being pushed into the economy in these massive stimulus programs. We're seeing kind of monetary policy become more restrictive for the first time since kind of there was crypto. Yeah. So it's going to be interesting to see for sure.
Spot on, Cami, and very well framed. We are truly in uncharted waters here. Never been in this situation during the crypto age before. Cami, I want to shift gears here a little bit and talk about the Biden executive order. Over at the Defiant, you guys are covering this story very closely. Let me read the headline you guys went with, because I think it's really instructive. Quote, crypto community relieved by Biden orders balance, yet wary as oversight regime takes shape. Cami, tell us a little bit about how you're thinking about this.
Yeah, so I think the overall reaction to this executive order was, as we said there, just like a sigh of relief. This has been just a looming risk over crypto. This kind of fact that the U.S. was going to come out with just like more broad crypto regulation. And there was this fear that, anything could happen, that Biden could say, crypto is illegal, or just like go out very strongly against the space. But what we got instead was this very balanced executive order, which recognized that it is important for the US to remain at the forefront of innovation, which recognized the potential for crypto to provide more universal financial access. And, those were kind of one of the two main points in the order. In addition to providing, of course, consumer protection, which is always going to be a focus in regulators. So that was expected. So all in all, very, very positive news. So the bottom line is crypto is not getting banned in the US. The US is looking at the space in a very kind of balanced, constructive way. It recognizes its potential. So it's great. I think, just a note of caution within kind of the optimistic news is that the devil is in the details, and that while that's kind of the direction of the executive order, now the working groups need to actually kind of sit down and figure out what their policy recommendations are. So it's still kind of yet to be seen what exactly those policies will be. So maybe, there is kind of room for them to be more restrictive or less restrictive. So that's kind of TBD. But just on the face of it, I think it's hugely positive.
Yeah, now it's time to do the work. Let me ask you this. Is there anything that you saw in this executive order that you thought you were particularly constructive on, or is it just the fact that this executive order sort of has been signed and that we're moving forward that gives you cause for optimism?
The fact that we're finally moving forward with a integrated regulatory framework for crypto that spans all the official bodies in the US and agencies. I think it's great, because what we've seen, in years past is that each agency has its own specific view about crypto. So the SEC will say everything is a security. The CFTC will say Bitcoin and Ether are commodities. There's tax frameworks for crypto. So it's been kind of like a very fragmented take and framework for crypto. So it's great to see just a unified effort where hopefully everything and all agencies are working together and under kind of the same view. And it's what the space has always needed, which is clarity, regulatory clarity, seeing where everyone stands, what's allowed, what's not. So I think that's kind of what's so positive about this.
Yeah. Fragmented is exactly the right word. And the search for clarity is something that we hear about whenever we talk to people in the space. And I'm sure you guys over at the Defiant hear it too. Talking of fragmentation and consolidation, Yuga Labs, the company behind Bored Ape Yacht Club, acquired the intellectual property of CryptoPunks and Meebits from Larva Labs, a huge story in the NFT space. Cami, for people who don't follow this space as closely as you do, what's the significance here? Why does it matter?
So this is such a huge story, So for context, Larva Labs are the creators of CryptoPunks, and CryptoPunks is one of the first NFT projects. I think they were created back in 2017, I believe. They were kind of the first together with CryptoKitties, and they were pretty kind of dormant for a while, but really took off last year as kind of a status symbol. People who owned CryptoPunks owned one of the very first NFT collections, and just the price of these tokens really has soared into the several millions, and so it's really become kind of the way to signal that you are kind of in the club, Right. But then Bored Apes Yacht Club, which is created by Yuga Labs, started kind of competing head to head with CryptoPunks as kind of the most sought after NFT, and a big part of that is because, interestingly, of the IP structure, the difference in intellectual property structures for both projects. So for Bored Apes, where they innovate is that holders of the NFT hold the IP the NFT itself, which means that they can commercialize the image, like the asset. They can, do whatever. They can sell T-shirts of their Bored Ape. They can create a video game based on the Bored Apes they hold. While for CryptoPunks, the artist owns. It's not the holder that owns that IP, so they can't really kind of commercialize or build upon the NFTs that they own. And that was generating a premium on Bored Apes. And last year we covered at the Defiant how Bored Apes were overtaking CryptoPunks and passing the floor price, which is, the floor price is kind of the cheapest price that you can get one of these tokens for. So it's in that context with like Bored Apes becoming these just hugely successful project. There's been over $1 billion of trading volume for Bored Apes. There was some news leaked that Yuga Labs was raising money at like a $5 billion valuation. So it's just become this like juggernaut in the NFT space. And so it's with this kind of newfound power that they were able to acquire kind of the crown jewel of the space, which is CryptoPunks.
Yeah, it's truly fascinating. And again, very early in the space, talking about intellectual property, the uses for the intellectual property, how the owners of that intellectual property can capitalize in it. It's extremely early days, isn't it?
Yeah, it's so fascinating because we're seeing these discussions about intellectual property, and it's so different from what we've seen in kind of the traditional art world, because when you own a piece of art, you own the art, but you don't own the intellectual property. Like obviously the artist does, but here like NFTs are really changing the game. They're kind of enabling the holder to actually really truly own the piece. So it's opening up a whole new way of understanding digital ownership.
Yeah, opening up a whole new way of understanding and opening up new potential to develop that intellectual property in ways that have never been done in the past.
Yeah, I agree. I think one kind of caveat here to point out is that while this is great for holders, I don't know if it's so great for artists. It's like, it leaves them a little bit less protected, though there is kind of ways to make up for that. There's kind of the ability to include in the smart contract a way so that the artist is always earning royalties from the trading of these works. So it's not like the artist completely loses out, but I'd imagine as a creator to kind of, relinquish the rights to exploit your own work is a bit kind of, I don't know, aggressive, I guess. But yeah, it's kind of a whole kind of new way of doing things.
Yeah, I think that's very well said. And look, I think, again, chapter one here, I expect that there are going to be new structures where artists are going to be able to retain residual economic interest in the works that they create. I suspect that is going to be something that we're going to see coming in the very near future. Cami, you said NFTs are a way to signal membership in the club. You are definitely a member of the club. Folks who are not a member of the club, maybe some members of the European Parliament. Let's talk a little bit what's happening in Europe. It seems as though the most controversial provision from MiCA, this is the Digital Assets Act in the European Parliament, that could have potentially banned Bitcoin, has in effect been removed from the legislation. This is a very complex legislative process that's happening over there right now. How would you explain it to someone who hasn't been following this story?
I think it's just baffling, this view that the EU, not the EU, but the lawmakers presenting this proposal, the stance that they're taking. So as I understand it, lawmakers in the EU are proposing effectively a ban on proof of work because of its environmental impact. So, they're saying cryptocurrencies which are based on a consensus algorithm that is hurtful for the environment should kind of transition into a new consensus algorithm, which is less harmful. So effectively saying proof of work needs to be scrapped for proof of stake. Which, to me, like, one, it's really it's crazy to see these lawmakers taking a position that's like taking sides in this debate, which has been so controversial, kind of saying that cryptocurrencies are so and kind of spending too much energy and so on, and it just kind of reflects what I believe is kind of a lack of understanding on how these technologies actually work, because what they're saying is, like, Bitcoin should just go ahead and change to proof of stake, and that's kind of clearly not understanding how this actually works. It's not like Microsoft can just like issue a patch on its software. It's like this entire ecosystem that needs to agree on a change of its consensus algorithm. So yeah, it was a bit baffling to see this regulation, and it was in stark contrast with what the U.S. is doing, which for at least for now, seems like it's a much more measured, kind of thoughtful approach to crypto than kind of these lawmakers saying, oh no, like proof of work is too environmentally harmful, like you should just change to proof of stake.
Yeah, baffling seems like the right choice of words. By the way, this is the European Parliament that's headquartered in Strasbourg, France. And MiCA stands for the Markets in Crypto Assets Framework. It's much broader than just this provision about potentially banning proof of work coins. But let me ask you this, Cami. Obviously, ESG is an incredibly hot topic in Europe right now, something that's not going away anytime soon, even though this provision has been stripped out of the potential legislation. How do you see this debate unfolding as we go forward, into the future?
ESG in crypto, I think, it's so I believe there are market solutions to this, fortunately, because there are proof of work based networks, but there's also many proof of stake networks that are emerging. Notably, Ethereum is transitioning to proof of stake. There are many other EVM chains and other smart contracts platforms that are based on proof of stake or proof of stake like kind of consensus mechanism. So, if people value that and value the fact that the network is less needs less energy to work, then those networks and those tokens will become more valuable and be more used. But if Bitcoin is seeing adoption and demand, it means that there's people who believe that the energy that is spent in securing Bitcoin is worth it. And I mean, honestly, just like my personal opinion, I 100% agree. I think, like, Bitcoin is a revolutionary technology. It's a digital gold. It's censorless money. It's the first cryptocurrency network which allows people to access a financial system in a permissionless way without needing intermediaries. That's a huge innovation and revolution. And now with the Russia-Ukraine conflict, we see more than ever why something like this is needed. So I absolutely believe that the energy that's put in to secure the Bitcoin network is worth it. Like, Bitcoin is definitely worth it. And there's also kind of nuances here, because even if Bitcoin requires a lot of energy, not all of that energy comes from fossil fuels. A lot of that is green energy. So that's something to consider, and that I think often gets overlooked in the debate. So I think crypto is kind of this free market, and I think the market will decide whether people think these environmental concerns are actually worth going to other proof of stake chains or not.
Yeah, very well framed. And we should say that there are people who clearly advocate for this notion that green energy, renewable energy, is going to be stimulated by Bitcoin and by some of the things that are happening in the space. Also, I should probably point out that there are other aspects of this legislation right now preventing money laundering, terrorist financing, and other types of criminal activity that this bill also seeks to work out. As we go around the world here, there's a really interesting story coming out of South Korea. South Korea has just elected its first crypto-friendly president, Yoon Suk Yeol. I was reading a piece written by our friends over at Forecast News who cover Asia very closely. Here's what's being talked about in South Korea. Basically, legislation that's friendly toward ICOs, revamped taxation, and investor protection. A staggering 10% of Koreans own cryptocurrency. Kemi, what are your thoughts?
It'll be such an interesting shift for South Korea. I remember back in the 2017 bull run, South Korea was at the center of it because I think there's, as I understand it from kind of my reporting at the time, crypto is very kind of aligned culturally with South Korea. South Koreans, they really like investing and speculating and gambling. It's just like part of the culture. So like ICOs were very popular at the time, and that really prompted a very kind of strict and harsh regulatory response. So ICOs were banned, and there was in general just a kind of anti-crypto stance from South Korean authorities and regulations ever since. So this will be a huge kind of change if it's true that this pro-crypto new president kind of actually enforces and just like changes those rules and regulations. So I think that's yet to be seen. But I think kind of giving the having friendly regulation in a country that is already so predisposed and that likes crypto so much, and where like a large percentage owns crypto, will just kind of continue to fuel this market there.
By the way, speaking of people who like crypto, I wanted to end with this story. Elon Musk, on a tweet thread with Michael Saylor, talking about inflation, had this to say, quote, "As a general principle, for those who are looking for advice from this thread," meaning in the context of inflation, "it is generally better to own physical things like a home or stock in a company you think make good products than dollars when inflation is high. I still own and won't sell my Bitcoin, Ethereum, or Doge for what it's worth."
That's kind of Elon being Elon. In the Defiant end of year content, we had a list of top defiers, and I think we named him Crypto Twitter King. So now he's exerting his power. And listen, I think he's kind of saying what's on a lot of people's minds at the time. Like it's a scary time. There's a war going on. There's kind of record high inflation in the US. I think, that's what a lot of people are doing, just like going out of cash, going into hard assets. And for many people, kind of crypto has been a hedge against all this volatility and uncertainty in the market. And I mean, the other thing to note about that tweet is that Elon owns ETH and Doge. Well, I guess like we knew he owned Doge, and of course, like he had a Doge CEO on his Twitter bio for a long time. But yeah, of note is that he has confirmed that he owns ETH. So yeah, a lot of kind of the Ethereum community was understandably freaking out about that.
Yeah, absolutely. Cami, always a pleasure to have you back on Real Vision on this show. Thank you for joining us.
Thank you so much, Ash. This was great.
Thanks for watching, everyone.